All right, well, good afternoon, everyone. While folks are getting logged in, we'll just go ahead and get started. I'm Kyla, I'm the Director of Programs with Co.act Detroit. Welcome to our webinar on managing cash flows through COVID-19. For anybody that's not familiar, Co.act is a resource hub for nonprofits. Typically, we are located in New Center at Woodward and Grand, though right now, of course, our space is closed, and so we're providing all of our programs virtually. You can see what other programs we have coming up at our website at coactdetroit.org. Today, we're very excited to have Erica here with us. Erica is a CPA with UHY and is an expert in helping nonprofits with their cash flows and is going to talk to us specifically here today about practices in light of the COVID situation. So Erica, I'll go ahead and turn it over to you.
Okay, thank you, Kyla, and thanks for having me. Welcome, everybody. Some quick background. I am a CPA that works with nonprofits, and before going back to CPA work about 5 years ago, I was working in the nonprofit sector. I had taken a bit of a CPA sabbatical and ended up working for nonprofits. So worked at Gilda's Club, was my first nonprofit I worked at several years ago, and then some arts organizations, Detroit Chamber of Winds and Strings, Eisenhower Dance Ensemble. And then ended up, my final stop was working at the DIA in their accounting department. If you guys are working in a nonprofit, you know you wear many hats. So even though my background is in accounting, I did a lot of work with development, strategic planning, basically nonprofit management in general. So really enjoy working with nonprofits and like to share whatever knowledge I can. I've been very fortunate in that when I went back to CPA work at UHY, I was very invested in trying to do some outreach and nonprofit education, and they've been very supportive of that. So they let me put on a couple seminars a few times a year and reach out to organizations like Co.act that help with capacity building to see what I can do to help out. So thank you very much again for having me. So when COVID started to pop up, when we were starting to realize we were going to have to be shutting down, I started to work on some cash flows. I'm on a few boards and we had to do some analysis. Are you guys seeing my screen okay? Kyla, is it up okay?
Yes, looks great.
Okay, so as I said, I had to do some initial analysis as a board member to help figure out how our cash flows were looking to get us through what it looked like it was going to be some time with the organization more or less shut down or not operating at full capacity, especially with arts organizations. So we sat down and started to do some cash analysis. So thought I would walk through what we did, and hopefully this will be helpful to you. So when you're getting ready to work on some cash flows, there's a little bit of information you need to get together. You want to, in this situation, since we're dealing with a crisis, you really want to prepare for the worst case scenario in order to maximize being prepared and give you the most flexibility. So the first thing you're going to need to do when you start is to identify what your monthly cash disbursements are. And a good way to do this is to actually pull out your bank statement, because sometimes your accounting will have it, but if you look at your bank statement, you'll see what those charges are. Sometimes you'll have electronic charges coming through that you know you're paying, but they're not always clear. Then you want to identify any cash receipts, which at this point in the game is really hard to pinpoint. And then you want to kind of review, if you haven't done this already, review how your payroll is looking. Are there reductions needed? Can you work at 100% paying staff? And to figure out where you can be once you start working your cash flows. So the next slide I want to talk about assessing your cash and your liquidity. So basically you're going to start out with your bank balances. You'll have a checking account, whatever your bank balances are. And then in the nonprofit world, we also have to kind of review our liquidity, because even though we might have a lot of money in the bank, sometimes that's restricted. If you've received a grant to build something or to run a very specific program, that you still need to honor those restrictions. So what I recommend is to back those amounts out so that you really find out what your true available cash is to start working on your operations. And as I mentioned to Kyla, if you have any questions as we're going through, please feel free to type those in the chat window and she'll get those to me. I like this to be interactive, so I'm happy to field questions as we go. Please feel free to chime in if anything's not clear. So hopefully everyone kind of has understanding of managing these restricted balances. So then in this scenario, we've got available cash. I was doing this as of March 31st of $76,000. So then the next slide is an Excel spreadsheet, and I have templates, which I'm happy to forward to Kyla that she can share with you all if you just need something to drop your numbers in. And this is where you want to start to analyze your actual cash flows. So your monthly cash receipts, again, this is hard to gauge. Maybe you have something standard. I'm on the board for the Scarab Club. So the Scarab Club actually has, I don't know if any of you are familiar with that. It's behind the DIA. It's an arts and culture membership group. But they have artist studios on their 3rd floor. So those artist studios, they are rented out to artists. So that should be, you know, a fairly standard monthly income, even as we go through this COVID crisis. Hopefully, they're at a point where they can continue to pay their rent. So that is something that we would expect still to come in. So I would put this on my monthly cash receipts. If you have a donor that has pledged, you know, does like a monthly donation of a couple $100 a month or whatever the case may be, and you know that they're continuing to pay, go ahead and put that on. If you're receiving some sort of grant funding that's being paid out, you know, you just really need to start to go through your cash receipts and try and figure out what's still going to be coming in. And as with nonprofits, a lot of times your cash flows aren't always consistent because we rely a lot on donations. So there might not be something that's a standard monthly amount, and that's where it does get hard to estimate. So if you do not know that it's definitely guaranteed to come in, I would leave it off for this initial analysis. We really just want to get a feel for what our monthly income would be that we can feel is guaranteed. So then once you get through your cash receipts, we want to kind of analyze our cash requirements. So the big one, most of the nonprofits I'm working with, you know, their programming is continuing. Program's been having some hiccups, but they're doing what they can. But the priority a lot of my organizations have had is that they want to help, if possible, continue to maintain payroll and pay staff. So I've had a lot of emphasis on trying to figure out how we can maintain payroll. So if you have payroll, you probably are going through a payroll service, so you'll still have that monthly payroll processing fee. If you have a rent or mortgage or something, you know, you still need to pay that. Now there are some options where that might be deferred, so we can talk about that a little bit later. But for this initial analysis, I would put it on there. You're probably still paying insurance, whether it's health insurance or liability insurance, whatever the case is. If it's a monthly payment, you definitely want to continue to pay that. And then utilities, you know, kind of try and estimate what your average monthly amount is. And then your payroll. Now in this analysis, we had we wanted to try and make sure we had 6 months of operating cash. So we kind of started to play around with the payroll number a little bit. We got our gross payroll and then said, well, where are we if we stay at 100%? Where are we if we're at 90 or 80%? In this analysis, we decided to keep payroll to take payroll down to about 80%. So we're paying at 80%, and that got our total cash disbursements up to $12,595. So at the end of the day, we thought we could count on $500 of income. So we're ending up with a netly cash outflows of $12,095. The available cash is where what we had come up from on the slide before. So we know we had $76,000 in available cash that we could use for general operating purposes, which resulted in about 6 months of cash reserves, kind of where we thought we would need to be to kind of, if we could wait out this crisis, where we felt comfortable. So that's kind of a big picture overview of how to do a monthly cash analysis and review reserves. Any questions on any of that so far? Okay. All right. Am I still on, Kyla?
Yes, no questions right now. Again, if for folks listening in, if you have any questions, feel free to type those into the chat feature at any point.
Okay. I mentioned to Kyla, for whatever reason, I've been on a few conferences today, and my internet's been popping in and out. So just want to make sure I'm not talking only to myself. Okay. So the next slide I have for you is a 12-week cash forecast. So, once you figure out your monthly forecast, we know that's kind of a practice to really just get a feel for where you are, how long you're sustainable. And then you might want to switch to also prepping a 12-week cash flow. I picked 12 weeks because that's roughly, 12 weeks because that's roughly 3 months, which I think gives us a fair idea of where we're going to be. So if you can schedule out for 12 months, I think that's really helpful. Again, it's very speculative, hard to do, but give it your best shot. So in this scenario, I started with a lower cash balance because I thought it'd be helpful to kind of see what happens when we hit a stumbling block and we end up with a negative cash balance. So in this scenario, we started out at $15,000, and so for the first week. And then we started to think about what was coming in. Like, well, we knew we were going to get a donation for $100, so we put that on. And then in week 1, we also run payroll. So we went ahead and put payroll in, whatever it's a biweekly payroll. So we put in our biweekly amount, and we know we're going to pay rent in payroll processing. So once we got through that, we ended up with cash, of $8,435. So then you'll see in week 2, this pulls up then into our beginning balance. Week 2, we didn't really know of any revenue that was coming in, but we know that we typically pay our utilities in week 2. So no revenue, but we paid our utilities. That brought us down to $8,025. So then in week 3, we knew we were going to get $1,000. We've been doing a little bit of development work, contacted some donors or looked up some grants, and we felt pretty comfortable we were going to get that $1,000 in. Week 3 is bi-weekly payroll, so we knew we had to run payroll again, so we put that on again as well. And we're still spending off faster than we're collecting, so now we're at $3,660 ending cash. Week 4, we don't have a lot to pay, we're just paying insurance here. We didn't know we were going to get some donations in, so we had a little bit of an uptick that week 4, coming in with operating cash flows of $550,000 to go into week 5. Now, week 5 is the beginning of the month again. We know we're paying rent, and we know we're doing payroll. We didn't know of any money coming in except this $100 that we have raised, set up as a monthly standard donation. And here you can see we hit a negative amount now. So when you can schedule out a 12-week forecast, it really helps you start to do some planning. So if you're doing this now and you can see that by week 5, you're going to hit that 0 or go below 0, that's when you're going to really want to start to do some analysis, or maybe try and step up development efforts, or maybe contact your landlord. Some landlords are doing, they're deferring rent for now. Some of the mortgage companies are letting you defer payments. They're not excusing payments, but they're letting you put on the end of your mortgage. So you just, you're going to want to start to think strategically on how you'll be able to manage a potential shortfall in cash. So again, this template only has 5 weeks, but this is a good tool just to help you understand where you're going to be should you get to that position with a negative cash. Okay. So that's kind of a high-level overview of cash flows and cash forecasting. Some things I wanted to talk about, some other considerations. So once you do your 12-week cash flow, start reviewing accounts receivable for collectability. If you've got some pledges on the books that you haven't received, or donors that are doing an annual pledge, but they haven't paid their amount yet, give them a call, see if they'll pay early, see if you think you're going to be able to collect it. If you've got something that's an old receivable that hasn't been collected in the past year, at this point, it's probably not going to be collected. So you might even want to consider, kind of doing a deep dive in your receivables and cleaning them up. And then you also, what I suggest is assess your restricted funds. So if you've been receiving restricted donations, some of the organizations have been coming back and saying, some of the foundations, that they will release those restrictions. They just want you to go ahead and use that money for operating purposes. So if you haven't been in touch with your donors that have given restricted donations, or foundations, individuals, I suggest you reach out to them and talk about their funds and see if they are willing to let you use them for general operating. I've had a couple nonprofits that have had good luck with this, and they've been able to funnel that money in to cover operations. And then also you'll want to assess your cash disbursements. Are any vendors providing forbearance? As I mentioned, some of the mortgage companies are doing that. I think I heard that Dan Gilbert was letting people, skip rent payments and put them on a little later. So check with your vendors and see if that's the case. And then also, take a hard look at your cash outflows. Are you paying for garbage pickup? If no one's at your office, do you still need garbage pickup? That you might want to start to review if there's some monthly payments that you are just haven't really thought about that come out of your account every month that you really don't need. I'm on the board for another little nonprofit called Signal Return, and they have they do letterpress printing. So they had a reg service where people, where they would get regs that came in once a month or something like that to help with cleaning and stuff like that. Well, they don't need that reg service. You might have a mat service where they clean your mats. Just start to think through what is really needed if you haven't done this already, and try to suspend or, get rid of those services you don't need, so you're just not spending money that is going out the door. And then the Paycheck Protection Program, I just want to talk about this a little bit because as of Friday, all the money had basically been gobbled up. But as you've probably been hearing in the news, they are looking at and passing hopefully some additional relief for that program. So be prepared once those funds are released. If you had loans in or applications in with your bank, make sure they're active. We're hoping this round, now that the banks have had a little practice, we'll get a little more movement on that and get some of our smaller groups helped out here. So if you are not eligible, or if you did not get the PPP loan, there are some other options as far as assistance from the CARES Act. I think I have that on another slide, so let me page up here. Okay, here's the CARES Act. So because a lot of us have been talking about that PPP program, just for your cash flows, there also is a worker retention credit and a delay of employee payroll taxes. These are two programs in the CARES Act that are not you're not eligible for if you get the PPP loan. But if you cannot get the PPP loan, remember that these options are out there for you as well. So the delay of the employer payroll tax, they're allowing us to defer the payment of your FICA taxes, your employer's share of payroll tax, until December 31st, 2020. So again, when you're doing that payroll analysis, if you had payroll taxes in there, your payroll expense, circle back, because those can be deferred. So if you do not get the PPP loan, talk with your payroll service provider, ADP, Paychecks, whoever you're using. They should be familiar with these programs and can figure out how to defer those payments on those payroll tax expenses. And then also there's back at the top up here, this worker retention credit. Again, this isn't going to help at this point of the game, but I just want people to realize that this is out there. There's a credit is equal to 50% of qualifying wages paid between March 12th of 2020 and January 31st of 21, not to exceed $10,000. The eligible credit will be a credit against the payroll taxes to be remitted by the employer. If the credit is larger than the payroll tax, the excess amount will be refunded. So keep in mind, when they put this together, they were thinking more so of the for-profit organizations, but the nonprofits do qualify for this. So I'm not sure how this will get refunded to nonprofits because we don't pay tax when we file our 990, but there should be something forthcoming on this as we get further into the year. You know, as I said, at this point, everyone's been concentrating on the payroll protection program loan. So these other programs had kind of were not quite as on the radar. And then if there's any development people on the line or something to think about, they did, the CARES Act also did give an option for a charitable contributions deduction this for individuals. So when we switched to the Tax Act a couple of years ago, you know, they upped the standard deduction and they basically phased a lot of people out of doing itemized deductions and taking deductions for charitable contributions. But the CARES Act has put that back as an option, and individuals will be allowed to deduct up to $300 of contributions. So something for your development literature, if you weren't aware of that, just keep that in mind. Other strategies to keep in mind as you're working through cash flows and figuring out how to keep cash coming into the organization is to continue to assess your development plans and practices. I know there's been a lot of great webinars out there on development. A lot of people have been sharing their insight. I'm sure you've heard many options. You know, the one thing that I've taken away from it is if you were going to do a large event or you had already received some money for an event, you know, and your event's not going to happen or it's been delayed, you know, some good advice is to reach out to those donors that may have already paid and just ask if they'll consider making that event ticket a donation. So just because it's on the books, you have to remember that technically, if you received a bunch of money to do an event and then the event's not happening, that money technically is supposed to be refunded to the donors or held until the event happens, whatever arrangements you make. So if you're not going to do the event and you don't want to refund the money, you do need to reach out and see if they'll give it to you as a donation. You can't just assume that you can move that over to donations. If you're lucky enough to have an endowment, you can look into borrowing from your endowment corpus. This can get kind of tricky. If you have an attorney you can touch base with, it's not unusual to see loans against endowments. If the endowment was set up by someone or a donor that's still around, again, this is another opportunity to reach out to that donor and see if they'll release some of the endowment funds back into general operations. So anything that's tying up your liquid cash, you know, start to analyze it and see what you can do to make it readily available for you. And then stay on top of e-blasts. We're getting so many e-blasts. It's sometimes as we're zipping through, we might miss a couple, but there are some really, really good information out there. There's some good funding opportunities coming up. I know that Co.act had one out. One of their blasts last week was sharing some different funding options. So the foundations are working hard to get money out to the nonprofits, so you just need to pay attention and see what's out there. They really want to be using this money, you know, to help organizations stay afloat and to continue to pay their employees. So stay on top of that. And then I always have to mention that we need you to continue to keep your cybersecurity in mind. There's a lot of scams going on right now. So always be diligent in paying attention to that stuff. Don't, you know, be clicking on links that look weird or links that say, hey, we've got money for you. You know, just keep cybersecurity in mind, because it is unfortunate that there are still a lot of people out there trying to benefit inappropriately. So, all right, I think that is pretty much all I have. My contact information. I am always happy to talk people through things. If you have questions, happy to help. Again, whatever we can do to keep our nonprofit community strong and supporting the community. So.
Thank you, Erica. And I think I'd like to do a poll for those of you that are tuned in. We haven't used the hands feature, but there should be an option to raise your hand. And so I'm curious to know how many people here have applied for or gotten the PPP program. Is there anybody? You should be able to just click down on your screen and raise your hand.
Did everyone apply for the PPP program?
One, okay.
It's okay if I talk about this a little bit, Kyla, or is everyone sick of this topic?
Please.
No. This is, if you're not familiar with it, it really is a great program because it does allow for forgiveness of the loan if you're using it to pay employees. The idea behind it was that it would go to help pay employees. So it rolled out very quickly. We thought that we knew the money was going to go quickly. We were advising our clients, we thought it would last for maybe 3 to 4 weeks, and surprised it was gone in 2. So a lot of the banks have online applications, if you haven't already checked that out. But if you have employees, you just need to figure out what your average monthly payroll cost is. And the application process for the bank should walk you through that. But you can apply for up to 2.5 months of your average payroll. And again, the idea is that it will come back and help you retain your staff and keep paying employees.
So Natalie has shared that they applied, but they were told there are 100,000 applications in front of them through Chase.
Yep, and I just saw one of my organizations just got, they applied again early this morning, and they got a notice that their application had been accepted. So at least if you can get it in there and have it, get it into that accepted status when the new money, and we're feeling pretty confident that the new money is going to be released. So once they can get that through the politics, hopefully that'll hit the banks, and we'll be ready to go with this next wave of funding. And I'm sure if you've been following the news, there's been a little bit of scuttlebutt on who was actually getting the loans. There was kind of a caveat in it that if you had different locations, you could, with employees under 500, you could still apply for the loan. So we had some large franchisees applying that didn't necessarily need it. I think Shake Shack was one, and they announced today that they had secured other funding, so they're going to give back their PPP money. And it was to the tune of several $1 million. So hopefully some of that will be happening. They've tried to make the PPP loan very transparent. I think what I heard is accessible information for the media. So there will be some unofficial watchdogging going on to make sure it wasn't just gobbled up by, the larger organizations. Not that they don't need the money too, but some of them do already have cash available. So we really are hoping it gets to these smaller organizations where it's so critical to help continue to pay staff.
Yeah, and I would just add, I'm not sure if anyone on the tuned in here has heard, because it was announced sort of late in the process, but IFF is working with the community CRF, the Community Reinvestment Foundation, to make the process easier for nonprofits. So basically, if you're a nonprofit, and as someone pointed out here, applying with the traditional SBA lenders can be kind of tough because the program is functioning dually to serve both businesses and nonprofits. And so this partnership with CRF is specifically geared towards nonprofits. I would encourage, even if you've submitted an application already with another lender, at least contacting them. to see if it makes sense to also submit an application with them. And then if you need any support with the application, I know that there's a number of organizations also working to provide some technical support on, as Erica mentioned, figuring out what that payroll number is. There's a couple of really great resources online. We have our Co.act Connect program, which you can make an appointment to talk one-on-one with someone around different topic areas. And one of those topic areas we offer is financial management. So if you're thinking about applying, but maybe would like to talk with someone more or need some extra support, please reach out to one of us and we can connect you with some of those resources.
Great information. And I actually, I had someone, excuse me, ask me, they said they had, a couple different banks. They had their, that they had a savings account with one, and they said, which bank should they apply with? And I don't know how ethical this is, but I said to reach out to all your banks, because like we saw, Chase had this huge backlog and they didn't even get their applications online. So if you can get this process started, you can always withdraw the application if one of your other institutions, once you get through the process and get accepted. But if you're not having any luck with one of your banks, and if you do have accounts with another, make sure that you're going through all avenues there.